Hey, welcome to Be the Boss of Your Money. I'm Mitch Goldberg. This is a live stream about personal finance, investing, and so many other things to help you become better with your money so you could take control of your money. Today, the hot stock market, the hot housing market, things are just hot, hot, hot. Can they get hotter? Are they about to cool down? Should you make any moves with your money? That's what we're going to get into today. So let's roll the intro. Got a couple of things to get into, and it's going to be good. Here we go. Welcome back. I'm Mitch Goldberg. You're watching my live stream. It's called Be the Boss of Your Money. The whole idea here behind that name is to help you take control of your finances so you could be better with your money. When you're better with your money, it has a major impact, obviously, on your life. So we talk about budgeting, we talk about personal finance, we talk about investing, stocks, bonds, the latest in financial news. So that's what we're going to get into today, the hot stock market and housing market. Why could they continue? Why could they go in reverse? We need to take a look at things so you could make the best decisions for your money to make sure that you are properly invested, properly positioned right now so that you don't panic in or panic out, right? You don't want to make the wrong move. You want to make the right move. And sometimes the best move is no move. But that's a conscientious decision, right? Doing nothing is still a decision. If you're watching this in the live stream, during the live stream, please go ahead and ask me your questions in the comments. I love hearing from you. It's the best part of the show. If you're watching this in the replay, welcome to you as well. And of course, if you do have any questions, hit me up in the comments below. And for all of you, words of wisdom, words of encouragement, they're always appreciated here on Be the Boss of Your Money. So we take it to the tape. The first thing we're going to do is we're going to go and take a look at how the markets did today. And then we work on to bigger and better. Okay. The Dow down 96 points after being up over 370 points yesterday. NASDAQ off 7 points. S&P off about 4 points. Again, these are fractions. I mean, the Dow off less than 0.3%. The NASDAQ off 5 basis points, 0.05%, and the S&P off 0.1%. After yesterday's rally, after really, if you think about it, the rally we had Thursday, Friday, and yesterday, there's like no give back at all. This is as steady as it can go. If you watched the show yesterday, I laid out the reasons to be bullish. And I've been pretty clear in saying I'm pretty bulled up. And the rally we had, it's not just one leadership sector. It's across the board. It's the work from home, stay at home tech stocks that allow us to work from home and stay at home. You know, the shutdown plays, and it's the reopening plays that are working as well. Gold finally catching a bid. That to me is kind of important because if you believe the economy is rallying, you would think gold would start to go up, a little bit of a hint of inflation. But on the converse of that, the 10-year treasury is back below 1.7 at 1.66%. This is really tough to read. If the economy is getting better, economic statistics have been really incredible. Corporate earnings, not only have they been really strong, phenomenal fourth quarter, but 2021 Q1 earnings start coming out basically next week. Something like 25% of all the S&P 500 companies are reporting next week. And I still see analyst numbers still coming in lower. Okay, lower than the actual earnings. So earnings have been beating expectations by a lot. And even if they weren't, they're still up really big. Corporate America, publicly traded America, is really strong right now. The VIX is up a touch, but still below 20. So let's take a look at the most important news today. This right here is the most important news in the world, in the financial world, I should say, that you're going to see. California aims to fully reopen the economy June 15th. California is reopening. Texas has already reopened. Florida has been reopened. And you know what? I have to tell you, even New York is reopening. So when you have this massive reopening from the states all at once, more reason to be bulled up. This all confirms what we've been seeing in the economy. And then I want to show you something else. This is the TSA checkpoint travel numbers, current year versus prior, same year, same weekday. Do you find yourself going on to the TSA website and just browsing around when you're bored just because it's fun? I know I do. It tells us a couple of things. It tells us that people are moving around the country. Let's take a look. I'll show you what I mean. If we take a look at the TSA numbers, all right, you see this, all right, April 5th, traveler throughput, number of people flying, 1,562,000 people. Last year, 108,000. 2019, it was almost 2.4 million. But from 108,000 to 1.5, 1.6 million people, these numbers are so straight up. People are just running back to airplanes and flying in airplanes. They're running to the airplanes, flying in the airplanes. And let's take a look. Gasoline usage. Okay, I'm taking a look at the reformulated gasoline. That's the stuff with, like, unleaded and, the stuff that you get at the gas station. Okay, gallons per day is almost back to a year ago. Almost back to pre-pandemic levels. We're flying. Listen, I have to tell you, I was out the other day and I was stuck in traffic on the Long Island Expressway. And I'm like, damn it, I hate this place. The traffic on Long Island is always so bad. Then I'm thinking, wait a minute. I should be happy, right? We're getting back to normal. We're getting back to traffic. The world's getting better. The world's coming back. I don't like the pollution that's going to come back, but General Motors announced yesterday their new electric Hummer, and they've got a new electric Silverado and 28 other models coming out, all electric over the next few years. And it is amazing to see how quickly GM is pivoting to electric vehicles. When I say amazing, blown away what GM is doing. This has been being worked on for like 10 years now or more. But really about 10 years is when we started talking about 10 years ago is when we started talking, maybe 11, 12 years ago. We were talking about electric cars. And all of a sudden you see the electric cars coming out, vehicles from GM. And these aren't like special new kinds of vehicles. These are the cars that we like to see and drive and buy every day of the week. Well, we don't buy them every day of the week, but you know what I mean? These are the cars you see. A Chevy Silverado, that's electric. And the range, as big as it is, 400 miles on a full charge. That's it. I mean, lights out for combustion engine cars, right? I mean, I'm really impressed. So let's just catch up on a couple of things. We want to talk about the hot stock market. We've got somebody out there, and yes, Rick, you are in a number of my replays now because, I think that I'm in the replay. Well, you're watching the live right now, man. This is live. I'm glad you're out there. Thank you for joining me. By the way, while you're watching this in the live stream, give it a thumbs up or a heart, some reaction. And this way I get to see you out there. I love seeing you out there. Let me know where you're coming in from. By the way, Rick, where are you? Where do you come from? I'm not asking you for your personal address, just like, a ballpark, what big city, that you want to name that you live near. Where are you coming in from, big guy? So yesterday, we went over a couple of things, okay? We spoke all about, will high inflation ruin the party? Last week, we went time to run down all 30 Dow stocks. And in that live stream, that's when I went down through every stock in the Dow and said, stay at home, work from home play versus reopening, back to normal play, and a few that really fit in both categories. So if you have some time, take a look at those. We talked about inflation yesterday. That could throw things off. I said there's two things that could throw off this rally and this economic surge we're in. And if you don't believe me, just look at the statistics. Manufacturing numbers, durable goods orders. Boeing is getting big orders again. And employment. The employment report came out, 900 some odd thousand new jobs this past Friday was reported for the month of March. That is huge. And there's no reason for me to think that that can't continue over the next couple of months. Big portion of it is in travel and leisure. People going to restaurants again. The Texas Rangers had 38,000 people in the stadium. It's a full house, in Dallas, right? So this is big stuff that's going on. I know a lot of people aren't wearing masks. So that's a good segue. What could knock this economy on its keister, pull the rug out from the stock market? I don't think it would really hurt the housing market. A surge in COVID, the COVID variants. I think something like, I don't know, more than a third of all new cases today are the B117, the UK variant. That's the variant of COVID that was first discovered in the United Kingdom. It's a lot more contagious than the COVID that we had, the variant that we've been living through. And I think it's worse, can make you sicker and quicker. But about something like 75%, it's a big percentage of seniors are fully vaccinated now. And well over 100 million people have gotten at least one jab, and it's going up by the millions every single day. So we're very close to half the country being fully vaccinated. And the government mandate now is something I think by mid-April, April 19th, for all states to have enough vaccine supplies for every single person 16 and over to become vaccinated. Now, I realize not everybody's going to get vaccinated. Some people aren't going to get vaccinated just because they don't have to. Just they want to prove a point. It's a free country. I don't have to get vaccinated. Fine. If you're standing on ceremony, I think you're wrong, but that's your goddamn business. That's no problem. And some people just are anti-vaxxers, and that's their business. But when most people get vaccinated, we have herd immunity. It starts to slow down. But the current crop of people getting infected are younger. They're sicker because this is a tough variant, but they're getting through it. So I don't think a COVID resurgence hits the economy. The next thing is inflation. This is what we went into yesterday. There's two kinds of inflation. The one where input costs go up for businesses, and then they have to raise prices to you and I, the end consumer. But if they can't raise prices, then their profit margins get squeezed because they're absorbing the higher cost of input prices for their products. And if they raise prices, then consumers see inflation. And then the Federal Reserve says, we have to step on the brakes, pull in the money supply, shrink the money supply, jack up interest rates, slow down the economy, which often pushes the economy into a recession. So that could hurt. Okay. Another thing that could slow the economy down, but I'm not worried about it. Tax increases. I've heard many say this is not the time that you want. I've heard many say that this is not the time that you want a tax increase for corporate America because the economy is still so weak. No, I beg to differ. The economy is not so weak. The economy right now, the U.S. economy, is in such a robust reopening. We are hitting boom times in the economy right now, and jobs are plentiful, and we are surging in the economy. GDP is probably going to come in a lot higher than expected, and earnings are coming out. That's going to tell us a lot. not just for the second quarter that we just started, but about the second half of 2021. The worry, of course, is does this continue into 2022? I don't see any reason why it wouldn't. Companies have gotten their costs back. Demand is up. People are making money. I think we'll get infrastructure. It might not be the what is it, what was it, the $2.25 trillion infrastructure plan. We'll get something, though. Everybody wants infrastructure. It's very popular. It's a very popular thing in demand. So I don't see what's going to knock this market up. I'll look over here because I could see my screen and who's out there and if I have any more comments and whatnot. Okay. And Rick, you are 2-hour drive northeast of Pittsburgh. You live in a gated community called Treasure Lake near Interstate 83 miles north of Dubois, Pennsylvania. All right, cool, man. Really appreciate you taking the time to watch. And so let's get into the hot market. This is something that you need to see. Okay. So I showed you California. All right. California is opening. That's the biggest of the big. So California, Texas, and more states are following through with that. Homeowners behind on their mortgages could get a reprieve on any foreclosure until 2022. Do you know what this means? One of the reasons the housing market is so hot, there's a few reasons. The first one, I'm not going to say these necessarily in order of importance. I think they're all important, but I think the first one is interest rates are just low. Interest rates are so low that it makes home ownership in some ways cheaper and more economical than renting. That's one. Number two is you have the millennials who were quite delayed by the Great Recession and about 10 years following that are running into the housing market en masse, just a massive amount of home buying. They're having kids. There's more millennials than the baby boomers. I mean, whoever thought like, well, once the baby boomers retire, we have a shrinking population. What are we going to do with all these houses? And well, you have millennials who are now running into a shortage of houses. Okay. So that's another thing. The other thing is, I think this has something to do with it. People are living longer, so they're staying in place, aging in place longer. Another thing are millennials. Another thing are millennials moving into the city. Let me rephrase that. I don't like the way that came out. That was wrong. Another thing is millennials moving out of the city into the suburbs. If you're remote working, work from home, and your 1 or 2 bedroom apartment in Manhattan or other big cities just doesn't cut it, you're thinking, I need a room that I could work out of. I need a room for baby 1. I need a room for baby 2 on the way. I want a backyard. I need some extra space for the dog. I need a garage. I'm remote working, or I'm only going into the office 2 days a week, 1 day a week, 3 days a week, whatever it may be. They're moving out of the city and they're finding a great lifestyle in the suburbs. Who thought the suburbs were dead? Everybody wanted to live just downtown in an urban area and a close walk to Starbucks and mass transit. No. Millennials all of a sudden have become conventional like their parents, and they want a house in the suburbs and a white picket fence too. So the other thing that is constraining supply, and the other thing that's causing houses to continue to rise in price and stay high, is there's always a natural level of people leaving the home ownership market, leaving the housing market. And those are people who lose their jobs, they are foreclosed on, they can't afford a home anymore, abandoned homes. But those have disappeared. So another source of supply is out. And people thought once mortgage forbearance from the CARES Act is over in December, then it was extended to about now. Once those end, you have 2 million homeowners who have to pay that money back. They're not going to have it. Half of them are going to get foreclosed on, and it's going to cause a big push, a big move of inventory, of housing inventory onto the market. Well, guess what? Now Biden is extending homeowner protection for the rest of this year. So sorry, no fresh new supply coming onto the market except what builders could build in new developments in the Southeast and the South and the Midwest. Other than that, there's really not a lot of inventory coming on. The price of lumber is soaring. The price of copper is soaring. Doesn't matter. The builders are able to raise prices. So that's why margins are okay for the builders. And as far as the cost of a new home, it's not really a big part of the inflation numbers that the Fed is going to jack up interest rates on. It's more like your everyday expenses. The cost of everyday goods and services is really, I think, more important that the Fed's looking at. So that's about it. So no new inventory coming into the market. Prices continue to go up. Inventory is the lowest we've ever seen. And anyone could say, I want mortgage forbearance, because you don't have to prove that you're in trouble. You don't have to prove that you lost your job. You could just say, I want forbearance. The money that you owe will be tacked on to your mortgage at the end. No extra fees, no extra interest. And just when you sell your house, you'll pay back the money that you owe. It's really incredible. And I'm sure there are some people who are gaming the system, or saying mortgage forbearance, even though they don't need it, because it's like free stimulus until you sell your house and you have to pay it back. But that could be 10, 20 years away. That's what that's all about. So housing market remains hot, 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 because there's no inventory coming on anytime soon. The stock market, interest rates are still low. The 10-year treasury is below 1.7%. The Fed wants to hold rates low. I don't really see anything major holding back the stock market, except that we get into the second half of this year and corporations' earnings start to more or less match what analysts expect. In other words, as analysts keep raising their expectations, their forecasts, and they finally start to become more realistic about what companies could earn, and companies therefore stop beating analysts' expectations, that could maybe become a little bit of a headache for corporations and a lot of new stock like SPACs coming out to the market. But last thing, what could be good for the market is takeovers. And we saw, was it Union Pacific bought Canadian Railway? There was just a big merger a few weeks ago. I'm surprised it didn't get more coverage. A major railroad was taken over in North America. I think we see, my prediction, just my opinion, a pretty big merger boom, because while interest rates are still low and corporations could still borrow on the cheap, I think lots of investment bankers and corporations are getting ready to launch monster bond offerings to make monster acquisitions. And that's going to, in effect, pull a lot of supply off the market. Banks are allowed to raise their dividends and do stock buybacks now. You know what? I'm going on and on about good things. I don't really see anything majorly terrible. I'm not saying we can't have a correction at any time. So ultimately for the stock market, don't make your decision, though, on saying, I'm going to go to cash or reduce my stock holdings before the market goes down. You do that, of course, like always, based on your personal finance. If your goals are coming up within a few years, now is the time that you want to start peeling that money out of the market, put it into something stable, so it'll be there for when you need it. That has not changed. That's it. Thanks so much for watching. Keep in mind, I have a guest tomorrow, Charles Freeman. He's a CFA, chartered financial analyst, super bright person, and he's going to be someone who is very interesting. He's going to be very interesting to speak with. He posts great content, and every time I read his content on LinkedIn, I'm like, wow, I have to stop scrolling and really consider what he just said, and maybe it changes my opinion of things. That's it. Thanks.